Market structure, a very, very important aspect when it comes to trading. And in this video, we'll be learning everything concerning market structure. I made this video newbie friendly, right? If you're a beginner, you don't know anything about forex trading, well, this video would help you, would guide you to understand what exactly are we looking at, what exactly are we doing when we are trading things like this. You understand? Most people see all this and they say, wow, it looks very confusing. Trust me, it's actually easy. It's actually easy. The only thing I need from you in this session is your attention, and make sure to be taking note of important concepts. So, once again, I'm Ace FX Academy, and I'll be your guide, your tutor, and your host. And in this video, we'll be learning how to read the charts, how to read market structure. But before you come over to this video, I hope you've watched the Forex basics, right? In which I've done a video about. And I hope you've learned how to use your trading view. Because before you can practice everything I'll show you in this video, you have to understand how to use your trading view accurately. So I would assume you've learned all that, right? And you know how to place trade as well. So if you haven't, well, the video are already provided to you, right? You can also check my YouTube channel or the videos on Forex Basic, how to use your trading platform, and also how to use your what trading view. It's there. Watch all that before coming to this market structure video, right? So let's go straight into it. So we all know what market structure is. I explained it in the Forex basics. So I want you to understand that when we are looking at this as a trader, right, we are trying to understand the direction of the market. That is the first thing you're trying to understand. What did I say? Once you're looking at the chart like this, you are trying to understand the direction of the market. You understand? We want to know if the market is going up, if it's going down, or if it's moving sideways. And it's very, very easy to understand, right? Just by mere looking at it, you can tell the direction of a particular section of the market. For example, what is the direction of this market we see here? It's an upward movement, right? It's an uptrend. So the direction of that particular zone in which I marked is an upward movement, and we call this an uptrend. You understand? I said it in the basic section. We call this an uptrend. Now, what is the direction of this particular section of the market? This particular section, what is it called? Well, if you look at the direction, it's going down. So what does that mean? It's what? A downtrend. We can see it's moving downwards. And remember, in Forex trading, we just simply look at the direction of these particular zones and we buy or we either sell. Remember, also, we buy when the market is going up or when we predict the market is about to go up, and we sell when we predict the market is about to go down. Now, before we dive into what an uptrend really is and what it looks like and how to trade it, because I'll be showing you how to trade every single concept, both uptrend, downtrend, and sideways trend. I'll be showing you how to trade it. Before we go into that aspect, I want us to understand what we are seeing here. This black and white things you are seeing here in your own, I will assume your own is red and green, right? Your own will be red and green. Forgive me, my own, I actually edited the color, so you might be seeing something else, but I know your own will probably be red and green, right? What just happened to my chat? What just happened to my chat? Probably network. So like I was saying, I know your own will be red and green, and I will assume you've already learned how to use the Trading View app. And once you download that Trading View, it will be red and green. You can change the color to any one you prefer. I changed mine to white and black. So now let's study what this thing actually is, right? What all these things actually are. Now, these things are called candlesticks. These things you see here, this white and black stuff you see here, they are called what? Candlesticks. So now I will be explaining the anatomy of candlesticks, and I'll be using an image to illustrate that. Now, anatomy of candlesticks. We have to understand everything. We have to understand it purely. Let's understand all these little things before we go into reading the chart. Now, I want you to understand that these candlesticks are formed timely. It's based on time, right? And now there are different times in the Forex market. There are different times in your trading app, in your trading view as well. There are different times. So now, if you are setting a time in which you want to look at this thing in the 4 hours, right? It means it will take 4 hours for one of these things to be formed. When we go back to the chart, I will show you what I mean. So when you're looking at this thing, it means it will take 4 hours for one of these candlesticks to be formed. They are called candlesticks, don't forget. So the green one simply means the market is moving up. Take note of that. The green one simply means the market is what? Moving up, right? Means the market is moving up. And the red one simply means the market what? Is moving down. You understand? So that's just simply what it means. It means the green one is showing that this market is heading up and you are going to make profit from the upward movement, right? Now, the red one simply means the market is heading down. So now, whenever the market is heading up, also take note of this. Whenever the market is heading up, it is called bullish. Bullish move, right? Whenever the market is heading up, it is called bullish. And this bullish is spelled bullish, right? Bullish, right? So that's bullish. Now, whenever the market is heading down, it is called bearish. Whenever the market is heading down, it is called bearish, right? So the spelling of that would be Bearish, bearish. So take note of that as well. Now, these candles, since we know one is heading up and one is heading down, the green one is heading up. It is called a bullish candle. The green one is called what? A bullish candle, right? Because what is heading up. The red one is called what? A bearish candle. Why? Because it's heading down. Now, how do this candle form? Remember, I told you it formed timely, right? So let's say you're looking at it in the 1 hour time frame, because you have time frame in your trading view, and I'll show you that as we go back to the chart. Let's say you're looking at it in the 1 hour time frame. This part of your candlestick is called the body. This part of your candlestick that just look like a line is called the wick. Take note. This part of your candlestick, right, that formed completely is called the body. Why this part? Let me use a different color to demarcate it. This part you see here, they are called the wick, right? And now this other part you see here, they are called the body. So now this is the body of the candlestick. This is the wick of the candlestick. The line side are called the wick. Why the full drawing, this full side is called the body. Now, how this market is being formed is it opens from here, right? The market opened from here, and this market is opening from here. Why? In the ideology that is going to head up. So that is why it opened from here. You get? So now, once it opened from there, this week are being formed because the market, once this candlestick opened, once you see it in your chart, you see it's moving. Once this candlestick opened, first of all, it went down, right? It went down first of all to this area. This week shows area in which the candlesticks have gone to before. So once the candlestick move up and move down and move all the way down here, right? It forms this week, but then moves all the way up here to form this week again. Now, this week also shows that this candlestick got to this area while it was trying to form. Then at the end, instead of this candlestick to close at this top side, it came all the way back down here and closed here. You get? That is why you see here is called open, here is called close. Because this market opened here, went all the way down here, came back all the way up here, and decided to close here. Do you understand? Don't worry, when we are looking at the chart, you would understand it perfectly, right? Because I'll go over to the 1 minute time frame, so you see a particular candlestick forming on its own. So now we are looking at a bearish candle. A bearish candle means the market is going down. You get? So that is what a bearish candle is. Now, this bearish candle just simply shows you, right? The market opened here. Why did it open here? Why? Because it's heading down. Unlike this one, it opened here. Why? Because it's heading up. This one opened here because it's heading down, right? You understand? So that's just simply it. So now that it opened here, it would make a body all the way up here, right? First of all, then come all the way down here, and then go all the way back here before closing. You understand? That is why here is an open, here is a close, and here is a low. Why? Because it reached here to form this wick. It reached all the way up here to form this wick as well, but it ended up closing here. Do you understand? So this candlestick, wherever they head to, they are called wicks. And also, a candlestick that is going up, which in your chart it will be looking green, is called what? A bullish candle. A candlestick in which is going down in your chart is looking red, is called a bearish candle. And these candlesticks, they form at a particular time frame in which you are looking at, right? So now that we have gotten this off our mind, let us go now to the chart and look at these candlesticks before we can understand the main direction of the market, and how we can trade it. So let's go back to the chart. So now this is our chart, and the time frame at which I'm looking at this chart is 4 hours. You can see it from here, 4 hours. Now I'm going to change the setting to, let's say, 1 minute, so we can see how the last candlestick is being formed, right? Let's look at it together. So I'll pause this and change for those who will be asking, how did I change it, right? Let me just show you all. I'll go over to the time. I'll look for a particular time frame in which I'm looking at. We can see 1 minute. I'll click on 1 minute. So that's just how I'll change it. All right, so now you can see this is 1 minute time frame, and you can see that the last candle in which is here is showing some movement. You can see it's moving up and down. It's moving up and down. And at the end, this one have formed, because why? It's already 1 minute again, right? 1 minute has already exceeded. Another one is forming, right? Now for my chart, the white one is your bullish candle. The white one in my chart is the green one in your chart. Don't get it all confused. The white one in my chart is the green one in your chart. The black one is the bearish candle. It means the market is going down. You understand? And we can see the market formed a bullish candle first of all, and now is forming a bearish candle and is heading down. You understand? So that is just simply how candlesticks are being formed. Now, after 1 minute, you see this candlestick will close, because I'm looking at it in the 1 minute time frame. You understand? I'm looking at it in the 1 minute time frame. So you can see this candlestick is going up, down, and you can see the wick, right? This wick that is being formed means the candlestick reached all the way there, and it's finally going to close at a body. And you can see the black candle have closed, and this is the body, this is the wick, this is the wick. You understand? So that is just simply how candlesticks are being formed. Now let's go and understand the market structure. Now that we've fully understood candlestick, let's understand market structure and how we can trade it. Okay, now just like in the basic video, right? Let's not forget we have 3 types of trends. We have an uptrend, we have a downtrend, and we have a sideways trend. Now, these trends are just simply market direction, just simply telling us where the market is heading. Now, in this part of your training, I will talk about an uptrend. Then after I'm done talking about an uptrend, we'll go over to a downtrend. Then after downtrend, we'll talk about sideways trend, right? So everything about uptrend will be explained right now to you. So I want you to understand that uptrend is known as a bullish market. What does uptrend simply mean? It simply means the market is going up. And in trading, what do we do when the market is going up? We buy when the market is going up. Don't forget, we buy when the market is going up. Now, for this uptrend, we have to understand the anatomy of this uptrend, right? For this uptrend, the market forms, let's not forget, the markets move in a wave-like pattern, like I said. The market moves like this in a wave-like pattern, zigzag pattern. You understand? Zigzag pattern. Just like in life, we have ups and downs. The market also have ups and downs. You have moments in which you are doing great, and you have moments in which you are, things are not going great for you. That's the same way the forex market is. That's the beautiful thing about life, and that's the beautiful thing about the forex market as well. So now in this market, I want you to understand that in an uptrend, we have ups and downs. Now, the turning points of this uptrend are called swing points, right? Every point you see that the market turned are called swing points. So all these points in which you saw that the market changed direction, all these points in which the market from here turned down, this particular upside is called a swing point. From here, went up. This particular side is called a swing point. Very, very easy, right? Take note of it. So now, this swing point, what do we do in this swing point? We mark out the highs and the lows. The upside of a swing point is called a higher high. Those sides you see are labeled HH are called higher highs, right? So also take note of that. The lower side of a swing point is called higher low. That's the lower side. Those places are labeled HL, right? And now, when the market is moving upward, it forms these higher highs and higher lows, higher highs and higher lows. And remember, I said we buy when the market is going up, or when we predict the market will go up. And since this market is heading up, we want to buy at the most favorable zone that will predict, okay, once this market gets to this zone, we know that it's going to keep going up, right? The markets move up and down. Like I said, move up and down. You don't want to go buying up here. Why? Because the market will move down and you might be in loss. You understand? You want to buy down here so that when the market starts moving up, this downside, so that when the market start moving up, you would be in profit. You understand? You will be in profit. So now, where is the best place to buy in an uptrend? Well, the best place to buy in an uptrend is known as what? The higher low. Now, this downside we see here, these are the best place to buy in an uptrend. Why? Because you can see from this downside, we can see that the market actually went all the way up. From this downside, the market went all the way up. From this downside, the market went all the way up, right? So these are the most favorable zone in which you should buy the market. It's just like when you are, let's say you want to buy an iPhone, right? You want to buy an iPhone, and we know that iPhone sometimes they increase in price and they reduce in price. When is the best time you're going to buy that iPhone? Let's say you're aiming to buy 12 Pro Max, right? And you know that 12 Pro Max was, or 12 Pro Max was 600k, right? Let's use 600k. So now you want to get a 12 Pro Max, and maybe you heard from your friend that dollar is going to drop in price. So don't get it now. Wait for that. Wait for when that 12 Pro Max gets to 580k. At least you make 20k gain. You understand? Or maybe it goes down to 530k. You understand? You now get your 12 Pro Max. So once that your 12 Pro Max, once dollar drop in price and you see 12 Pro Max go all the way down, right? And reaches here, that is the best time to buy your 12 Pro Max. And so that once you buy it, even if it increases in price, you are still buying it at a low value. So that is the ideology of buying at the higher low. We are looking for the best value to buy a currency. And remember, in Forex trading, what we are doing is buying and selling of currency. You understand? So now I'll be showing you examples of this uptrend and how you can find these higher lows and higher highs in an uptrend. Then once we are done with how to find higher lows and higher high and how to buy in an uptrend, then I will go over to downtrend. You understand? So now we understood everything I said here. Let's go over to the practical section. Please remember, you can revisit this video in case it's confusing for you. You can revisit it and come back to it so that you understand everything I talked about in this video. So let's go over to the chart example. And the chart I'm looking at is actually GBP USD, right? And GBP USD is known to show great price action. So that is why I'll recommend it for you as a beginner. So you can use GBP USD to be practicing, you understand? So let's go straight into 30 minutes time frame. Let me pause this and find a good uptrend. So this is a live example. We can see this market is moving upward. You understand? This is an upward movement of the market. And in this market, what we are going to be doing, remember, in trading view, we just analyze the chart, right? Once you analyze the chart in trading view, you can go over to your trading platform, which is your MT5, to buy the market. So in this market, we have an uptrend, and we can see we have swing points. In each point you see here that the market turned from up to down are known as swing points, right? I'll just use a yellow, dot to map out the swing points. You can see all these points in which the market turned from up to down are known as swing points. We can see this is also a swing point over here. This is also a swing point over here. This is also a swing point over here, right? That is actually very, very good. Pay attention, because after this video, I'm going to give you a little bit of, assignment, something you do for me so that I will know you understood this, right? So the swing points are just turning points in the market. And now in this swing point, the top side are called what? The higher highs, right? That's this top side you see here are called the higher highs. Higher highs, higher highs, higher highs. You understand? All the top side are called the higher highs. Now, the downside are called the what? Higher lows, higher lows, higher lows, right? Higher lows. And now, in an uptrend, where do you buy? Try. You can buy, for those who remember, you can buy in a higher low. You buy in higher low. Why? Because you're looking for the most favorable price at which you can buy the asset, you can buy the currency. So now, if you want to buy in a higher low, right? Let's say this market is still moving, because sometimes this market you will not see all these things. The market will maybe show you and stop here. You understand? You don't know where exactly to find your higher low, because sometimes the market will be moving like this, right? But it will not, it will be moving, right? But it will not form all these things. For example, the market will move and stop here like this. You understand? It will not form all these things, right? It's left for you to find the best price at which to buy. You get? So now, how do you find that best price? You use a tool known as your parallel line. And in your trading, when on how to use your trading view, I showed you all these two, right? So if you don't know about this, I suggest you should go back to your trading view to find your parallel line. Just go to this your tool button, right? I showed you all the guide on how to use trading view, so this should be easy. You can see I started it, and I told you all to start it as well. So this is the parallel line. I started it, right? So that parallel line, you just take it from there, and then in an uptrend, you draw your parallel line all the way from this downside all the way. At least let it touch at least 3 to 5, or no, let it touch at least 3 to 2 higher lows, right? Then from there, you will raise it up from the middle, right? And if you can notice, it's touching at least 3 to 2 swing points. You get? Let me show you, right? So if we put this like this, and if we put this like this, right? You can see this market is actually touching 2 to 3 swing points. And I want you to understand something about the market. It respects a particular zone. These zones are just, ideological zones, right? It respects a particular zone in which we mark as traders. Now, this parallel line will help you mark the line in which the market is respecting. And if you notice, the market kept on bouncing back at this line once I drew it. And once it came back to that line, it went up. So what does this mean? Let's say I don't know what this market will do from here, right? Let's say I saw this market here, right? At this particular zone, and it's going down. What will I do? I'll wait for this market to touch this line before I actually buy. And where will I be buying? I'll be buying at the what? I'll be buying at the higher low. And as you can see, once I bought this market, I'll put my stop loss, I'll put my take profit. This thing I just drew just simply indicates where I'll put my stop loss and put my take profit. Remember, trading views for analysis, while your MT5 is for placing the trade. So now that I have drawn this thing, I will enter this market from here, right? I'll enter this market from here. And this is where I'll put my stop loss, just below here. Right? Let me use a different color for that so it's not confusing. Let me use red. So this is where I'll put my stop loss, and my take profit, I'll put it just above this line. And you can see, let me use green for that, right? Because voila. So this is what I will do. And the market came back to that line. Once it touched that line, you can see once the market touched that line, it went all the way up, respecting the parallel line. Some people use trend line, some people use parallel line. It depends on which one you like to use. You understand? Same thing goes for here. You can see the market almost touched the parallel line, but at this point, you can even say it touched it. Why? Because if you draw it perfectly, you see that the market will actually touch it. Let's say we saw this market here, right? So once the market reached that zone, you take your entry from there, putting your stop loss below and putting your take profit above. And now once the market got to that parallel line, it started buying. You understand? So in an uptrend, what do? You buy at the what? Higher low. In this downside, that's where you're going to buy. And we can see something like that happen here as well. The market went all the way up, came down, and once it reached down here, that is where I'll be taking my buy. You can see Forex is actually easy, right? Just know a particular place in which the market is heading to. So that is where I'll be taking my buy. And once the market gets all the way up to this my parallel line, I'll leave the market with profits. So you can see I've showed you all the best zones to buy in this uptrend. So while the uptrend was making higher highs and higher lows, I was buying at the higher low, right? The market will go up. I will buy at the higher low, the market will go up. Buy at the higher low, the market will go up. As simple as that. That is how I make money from trading. And that is how you would make money from trading. But I wouldn't suggest you trade a live account with only this knowledge. Please do not trade a live account with only this knowledge. Like I said earlier, I give my students up to 8 challenges, 10 challenges to pass. I help them acquire their own strategy before I approve them. After giving them a certificate, I'll now give them an approval to trade a live account. For now, you are still a beginner. Trade a demo account. Don't say, oh wow, this is just all we do in Forex, and go and enter a live account. You will blow up your account. You will lose your money. You understand? That is why people think Forex is a scam, because they don't calm down to learn. So after this, what are we going to do? I want you to do for me something, right? I don't want this video to be long. I need you to go to the market, go to the 1 hour time frame. I'm picking a time frame for you so that you will not be confused. Go to the 1 hour time frame or 4 hours time frame, these two time frame, and find for me an uptrend. That is your first assignment. Go to the 1 hour time frame or 4 hours time frame and find for me an uptrend on any currency pairs of your choice. You understand? So, with that being said, that's just simply the anatomy of an uptrend. This is an uptrend. Remember, the turning points are called a swing point. The uptrend makes higher highs and higher lows. We buy at the what? Higher low, the lower side. And how do you determine this lower side? You draw your parallel line. It's as easy as that. And so once the market touches the downside of your parallel line, which is this side, you will look for a buy entry. Do you understand? So that is just simply it. That is simply it. So now let's go over to the downtrend. So now for the downtrend, I want you to understand that the downtrend is known as what? The bearish market. Right? Same thing, just the same ideology with the uptrend, but this one is called a bearish market, a downtrend. You understand? Now the swing points are the turning points in the market, just like the uptrend, right? So the swing points are the points in which the market turn from here to go down, turn from here to go up, turn from here to go down, turn from here to go up. You understand? So those are known as the swing points. And remember, when the market is going down, what do? We sell. So in a downtrend, we sell at the what? Lower high. We sell at the lower high. Why? Because we are in the lower high. You can see At the lower high, the market started going down. You understand? So the best thing about trading, like I said, is you're going to look for the best price at which you want to sell something and at the best price at which you want to buy something. And let's say you are a seller, right? Let me use the same ideology. You are now the seller of that iPhone 12. And now you bought an iPhone 12 from maybe, let's say from China, from when it was, 600K, right? And you heard that dollar is going to rise in price. Wouldn't you be happy to hear that phone you bought for 600K would increase in value for 700K maybe 2 months time? You understand? So that 2 month time when it has increased in value, which is this up movement, it went here. Once it gets to this top side, 700K, that's the price at which you would love to sell your iPhone. So once it gets to that top side, which is the lower high, you sell. Once it gets to this top side, which is the lower high, you sell. Once it gets to this top side, which is the lower high as well, you sell. Now, the downside of this downtrend are called lower lows. Lower lows. The upside are called the lower high. And remember, we sell at the what? Lower high. We sell in a downtrend and we buy in an uptrend. So I hope you've taken note of that. Without wasting much time, let's go into the practical example and understand this perfectly. So this is a sweet example of a downtrend, right? A sweet example of a downtrend. And if you notice, you can see the market is, making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It's going down. Now, what do? We want to be selling at the lower high, but then we want to be able to predict this lower high. Let's say maybe we just saw the market here, right? Let's say we just saw the market here. We don't know if we should sell, if it's already time to sell, or maybe the market should keep moving up. So what do you do? What do you actually do? You just draw your parallel line. And for a downtrend, you draw your parallel line from the upside. You understand? You draw it all the way to the side. And once you've drawn it like this, let it be touching at least 3 points or 2 points. You click on it, right? And then you open it up. You get. So that is simply it. And if you see this my beautiful parallel line was respected perfectly. So now in this market, once it gets to this zone, right? Once it gets to this point of my parallel line, that's that swing point, I'll be looking for a sell. And how do I look for a sell? I'll just simply carry my tool and enter the market from here. That point at which it touched my parallel line, put my stop loss above and put my take profit below. Remember, you do the analysis in where trading view and you place the trade in MT5. So once you've done the analysis here in trading view, you go to your MT5 and place the trade. But as long as you are just doing only analysis, it's from trading view you would send for me your assignment, right? Because I'll be giving you an assignment or something, just a work in which you can do to show that you understood this perfectly, right? So you can see this is the perfect zone to sell this market at this top side, and you can see the market came all the way down, giving me good profit. Now I'll wait for the market to come all the way up again, and once the market got there, I would automatically sell again. Putting my stop loss here and putting my take profit below here. So, and you can see the market just kept on selling again. Wow, this is perfect. Forex trading is actually easy. People will now say is actually is a scam. Why? Because they don't learn. They don't take their time to learn. So you can see the market actually touched the parallel line and went all the way down. Right? Is that easy? As a beginner, this is what you just need to know. This is what you need to know. Market direction. So now, once the market is moving down, we know we are going to sell. And for me, for my selling in my trading view, this white side means the market is moving in profit. This red side is my stop loss. You understand? This demarcation is my entry. So that is just simply it. And you can see I sold this market up to 3 times and I made good profits from it if I was trading the downtrend using this parallel channel. So that is it for a downtrend. Remember, we sell at the what? Lower high. The swing points are the turning points in a downtrend. You get, and in the downtrend, you look for the most favorable zone, the most good, the best area. Let me use best, the best area to sell the market. You understand? So now let's go over to a ranging market or a what sideways trend, because that is the third trend you would see in the market. Remember, I said the markets move in three directions: up, down, or sideways, right? Sideways means when it's just moving in a zigzag pattern like this, which is actually something that you can also trade, and I'll show you how to do that. So let's go over to the sideways trend. Now, for a sideways trend, which is a ranging market, we don't really have much to say about this type of market. Why? Because the market is being indecisive. It doesn't have any particular direction in which it's heading to, right? So that's why it's called a ranging market. So when you see a ranging market like this, first thing you want to do is, let's say you've seen the market touch up to 3 times, right? The difference between a ranging market and an uptrend or a downtrend is it doesn't have any specific direction. You understand? It's just moving, in a straight line sideways. So let's say you've seen the market touch up to 3 times. Maybe it did, let's say it did something like one, right? It touched here one, you get, it touched another zone two, right? So that's just simply touch another zone two, and let's say it touch another zone three. Once this market does something like this, what are you going to do? What are you going to do? You're going to draw your rectangle. You draw your rectangle at that zone in which the market is touching, and hopefully, because you know that there is something preventing the market from going up at that zone, and also below you also draw your rectangle like this, because why? You know that there's something preventing the market from going up at that zone. You understand? There's a way to trade this, right? But I won't teach you in this video. Why? I don't want to confuse you. Everybody, there's a stage for everything. There's a way to trade this, but I wouldn't want to confuse you. So if you want to trade this, you have to first learn what support and resistance is, and that is a whole different class section, right? Support and resistance. And we can know this video is already getting to up to 40 minutes, right? I don't want to make the video too long, or else people or would just lose interest in watching it. You understand? So for the meantime, I don't want to confuse you, right? We've learned a lot of things today, which is the uptrend, the downtrend, and the sideways trend. But then the sideways trend, I'm going to show you an example of the sideways trend, so you know that it also appears in the market. You get, I'll also show you an example, show you that it also appears in the market. You can see something like this is a sideways trend. You can see that the market was, when it finished making this uptrend, it started making a sideways trend all the way here. You get. So once, what are you going to do? You just draw your, rectangle, right? And you draw your rectangle again. You can see. Why I say that I won't want to teach you this is because a sideways trend can also break. And once it break, it will head down. You get, it will not range forever. So you can see this market just ranged like this and then broke all the way down. There's a way to trade this. To trade this, you need to understand support and resistance. Maybe I'll make a separate video on it in the future. But for now, I hope you understood the uptrend. I hope you understood the downtrend, because that is a thing I wanted to take note of in this video. And I showed you live example, showed you practical example. You can see I took my time to explain this. So now what you're going to do for me is head over to your trading view and find a downtrend for me, right? Once you find a downtrend, you're going to draw your parallel channel on that downtrend and show me where you're going to be selling in that downtrend by using your short tool, right? Your short tool and your long tool. People know how to find this. I taught you all this in your trading view. So you do that for me, right? And then also go and find an uptrend for me. You understand? Go and find an uptrend for me. And once you find an uptrend for me, you also show me where you're going to be buying in that uptrend. You get, show me where you're going to be buying in that uptrend. And also you draw your parallel channel and send me the picture, you send me the image to my WhatsApp contact. For those who don't have my WhatsApp contact, right, let me just type it out for you all. At the end of this video, I'll just put my WhatsApp contact, which is 081209 44283. So now that is my WhatsApp contact. In case you're watching this on YouTube as a Nigerian, this is my WhatsApp contact. So just text me up, send me your results, and I will want to see how good you're doing, right? So I hope you understood this video. And in case you have any question, make sure to ask me. For the meantime, have a lovely day ahead.